Welcome, everyone, to How to Retire on Time, a show that answers your questions about all things retirement, including income, taxes, Social Security, healthcare, and more. This show is an extension of the book, How to Retire on Time, which you can grab today on Amazon or by going to www.howtoretireontime.com. My name is Mike Decker. I'm the author of the book, How to Retire on Time, but I'm also a licensed financial advisor, insurance agent, and tax professional, which means when it comes to financial topics, we can pretty much cover it all. Now, that said, please remember this is just a show. Everything you hear should be considered informational, as in not financial advice. If you want personalized financial advice, then request your wealth analysis from my team today by going to www.yourwealthanalysis.com. With me in the studio today is Mr. David Franson. David, thank you for being here today.
Hello, thank you.
David's going to be reading your questions, and I'm going to do my best to answer them. You can send your questions in right now or anytime this week by either texting them to 913-363-1234. Again, that's 913-363-1234. Or email them to heymike@howtoretireontime.com. Let's begin.
Hey Mike, I was told that I should turn my hobby into a business so I can lower my overall taxes each year. Is this legit?
It is legitimate if your business is legitimate. So let me ask you this question. Are you trying to get clients? Are you trying to run a business? Are you trying to generate income from your quote unquote hobby? Because I know many people that do generate income from their hobby. There are people that have hobby farms and they sell their produce. So
Okay.
that's a legitimate business.
All right.
I'll use like an example, a quilter. I know there's a large quilting community here in Kansas City.
That's right, yes.
So if you're building quilts and then trying to sell them, that would be a legitimate business. There has to be a legitimate exchange of goods and services for money. If there is not, I would caution you heavily against this. So
Okay.
the idea was a bunch of financial advisors who probably didn't know really the extent of tax law got the idea of, well, if you're going to spend the money already, why don't you just buy it and write it off? Just get some LLC going or whatever and open up your business account and fund it there and just write it off and the taxes. And no,
Okay.
the IRS is not someone you should mess around with.
No.
You can't cheat the IRS. And I've never heard of someone doing this without running a legitimate business and getting away with it. You don't take shortcuts. So no, if it's not a legitimate business, please don't do this. It is something that I've seen and heard, I should say I've heard people getting in trouble for. I've never had a client do this because I tell them not to. I won't work with people doing sketchy things. I can't be bothered by that. But yeah, don't cheat the IRS. Don't try to, how much for the risk you're taking of an audit, okay, with the IRS, which you'll probably get in a lot of trouble for if they audit you when you're doing this. What's it worth? Because a deduction, you might get 20 cents back on every dollar you spend.
Oh.
I mean, is it really worth the risk that you're taking? I just have a hard time with this. But no, I would not say it's legitimate if your business is not legitimate. Now, if your business is legitimate, then yes, deductions are great. Make sure you're double checking on what you can spend and what can be deducted. Some things can, some things can't. Make sure that you're doing it appropriately so you're not taking your family out to dinner saying that you're on some sort of meal per diem situation. Like, don't take those shortcuts, okay? If you have a small business that you want to start in retirement, a lot of people do this. So executives or people who are higher up, they loved what they did, but they want to do it with more freedom. Maybe they're a consultant now just to stay busy because you want to keep the mind sharp. You want to have a little bit of stress in your life when you're retired. Here's a great way to set it up. Just get an LLC, okay? And then you're going to file it as an S Corp. So here's why. If your side hustle, legitimate business that you're going to do in retirement is earning, let's say, $60,000, $70,000 a year, then you might want to get an LLC and file as an S Corp. And what you can do is you can pay yourself a salary of, let's say, $35,000 a year or so. It's all with ratio. So please don't actually just do $30,000 to $35,000. Talk to a CPA, talk to someone like us who can help you find the right balance. Because again, you don't mess with the IRS. But let's say $30,000 to $35,000 of it is your wage and the rest of it might be profit. What you've done is you've been able to generate income, and your salary that you're paying yourself is subject to FICA tax, but the profits are not. You're still having to pay income tax on it.
Okay.
You can still write things off with your expenses. You can still do a lot of things, but you want to make sure that you're generating income tax efficiently. And there's all sorts of strategies like the LLC that files as an S Corp. But again, make sure you're paying yourself a reasonable salary. Make sure you're doing things by the book. Make sure that it's a legitimate business. But yeah, running a business in retirement can be a really fun thing to do. You've got to have purpose in retirement. Now, if your legitimate business, let's say, is like 10, 20,000 a year of profit, and that's kind of it, you might not need to do the LLC with the S Corp. Maybe you just are a sole proprietor, assuming that there's not a lot of risk. If there's risk, make sure you have the insurance. Make sure maybe you do the LLC to separate yourself from liability because you still need to protect your assets in there. But yeah, I mean, there's a lot of fun ways to go about this. Is it a legitimate business? If yes, then great. If no, steer clear from it. This is one of the shortcuts that people like to recommend that make them sound smart. When really, I think, and again, it's just my opinion, it's just kind of risky. That's all the time we've got for the show today. If you enjoyed the show, consider subscribing to it wherever you get your podcasts. Just search for How to Retire on Time. Discover if your portfolio is built to weather flat market cycles or if you're missing tax minimization opportunities that you may not even know exist. Explore strategies that may be able to help you lower your overall risk while potentially increasing your overall growth and lifestyle flexibility. This is not your ordinary financial analysis. Learn more about Your Wealth Analysis and what it could do for you regardless of your age, asset, or target retirement date. Go to www.yourwealthanalysis.com today to learn more and get started.